Hello everyone, welcome back to my channel. So this video marks the end of the week number 56 in this Road to 100k Realized Return Challenge, and it has been yet another positive week, although I should say that it could have been so much better. We could not capture a great deal of profits that could have come our way, but I'll explain this a little bit later. So for the time being, as you can see here, this is not a mistake. We don't have any positions at the moment. Basically, we liquidated our entire portfolio, and I think the most important aspect to address right now is the shares of Pfizer, which were sold. If you recall, in the previous video we had 40 shares of Pfizer still remaining, but as you can see here, we managed to sell them, and we sold them at the price of 26.05. We still paid $1.01 in commission. And why is that? Because basically this price was already, I think, good enough for us to get rid of the shares, and still we managed to collect a little bit more than $1,000, so $1,042. Less commissions, of course, but still, I think this money can be better used somewhere else, and so that's why I decided not to wait any longer. This price was already good enough, and so we got rid of the shares. Now keep in mind, and this is something that needs to be emphasized, because of all the accounting that I did here in our scoreboard, I just assumed that these shares, these 40 shares, were bought at the price of 28.50. So basically we still managed to get a loss on this, on the shares. So and here is the actual number. So we managed to lose on these shares $99.01. And let's just filter here for the Pfizer in order to make a better understanding of what actually happened. And so basically these are all the trades that we did involving Pfizer since this batch of shares was bought in the first place. Even though we already had Pfizer shares before this date, those were sold, and so this is the point in time in which the shares, this batch of shares that we finally got rid of, began to be accumulated. And so basically what we did here was, we sold the shares, average cost 28.5, and we got, as you can see here, we got a loss of $98 on the sale, and the commission gives us a loss of 99.01. But we still managed to collect in premiums for this for these 40 shares $102.76. How is that? To put it in a very simple terms, if we manage to here filter just for the covered calls, and you can see here that these are, let's see where they are. Yeah, so we need also to put here the sell, because this is the these are the trades, all right, the covered calls on Pfizer, in which these 40 shares that we sold now were involved, were used as collateral. And what we basically did was we picked up, let's put this a little bit more to the side, this is the number here. So we basically used all of these premiums that we collected, and we multiplied by 0.4, which is basically the 40 shares, divided by the number of contracts right here. And this gives us basically the premium, the contribution to these premiums that these shares these 40 shares managed to contribute to this premium. So the contribution to the premiums that these 40 shares had. Now, from this moment onwards, because we on April the 9th, that fateful day, we had to sell 260 shares. These 40 shares remaining could no longer be used as collateral, because we cannot use just 40 shares as collateral to sell calls, because call contracts, as all option contracts, require a minimum of 100 shares. So basically these shares were idle and did not contribute with any more premiums. So we can only count on these premiums here as the premiums that these 40 shares got. And as you can see here, the calculation. So this all makes sense, because it's always 0.4 divided by 4 for these 4 contracts, divided by 24 in these contracts, divided by 28, and divided by 30 in this one. And so basically this is the contribution. These are the premiums that we collected with these 40 shares. And because of that, we add to these 99.01, and we still got a gain for these 40 shares. These shares got an overall gain of $3.75. Now, if we still account for this gain right here, $723 dollars and 75 cents, and this loss over here that we had, because we had to liquidate those 260 shares to be able to recover from our large loss from the QQQ that we had on April the 9th. We had a loss of $1,183.93. So, and the calculation is right here, as you can see. And so we still had overall, a result of all the shares, the capital losses and gains and losses, and with the premiums accrued, we still had a loss of $466.43 overall. Now, for consistency, I mentioned this in a video before, when we sold these shares through the covered call, we are not counting on the dividends, all right? And because of that, yeah, I think it's fair, because we are not here. The part of our strategy is not to collect dividends; is to collect the premiums. But, and I put forward here, I went to check the activity statements. So as you can see, this is the activity statement from October 21st to August 22, which is yesterday. And why October 21st? Because this is when, if you see here, I'm going to put everything here again. This is when the 21st of October was when these shares began to be acquired. And if we look at the activity statement, and if you look at the dividends we collected, we have here this dividend, 168. We have this dividend here, 172, and we have this dividend, 178, 1,178. So if we had here 168 plus 172 plus 178.2, we collected dividend overall, but we need to subtract and the withheld tax. And as you see here, this is the same report, but on another page. And we now need to subtract, push this to the side, and now we need to subtract the withholding tax on the dividends. So here, this is the first batch of shares, minus 50.4. Now the second batch of dividends that we received, which is here, 51.6. And then the last one on that big dividend that we received, which is right here, we have to subtract still 353.46. So we still managed to collect in dividend a little bit over 1,000, which of course, and here looking at here, it offsets this loss of $456.43. So even if we subtract this, and we will see that overall, counting capital gains and losses, premiums accrued, premiums collected, and dividends collected, we still managed to come away from all the trades of Pfizer with a little bit over $600, which of course it's good. Could have been much better, but yeah, it is what it is. Now, with Pfizer out of the way, and hopefully for good, because we don't intend to have the shares of Pfizer anymore. Let's unselect all and select only the trades, the securities on which we did trades, discounting of course Pfizer, and I think this is everything we did so far. Yeah, I think this is good. Now, yeah, we can also yeah, let's keep the dates, the filter on the dates as well as it is, so there's no problem. I need to get back on the Pfizer as well, because we need to put back the Pfizer, and the reason for that is because we need to account for the weekly result that we had. And here, let's just also put the blanks here. And here, as you can see, I'm going to pull it back a bit. We had no trades from the previous week, so these are all the trades that we did, and we managed to get overall profit in terms of premiums, of course, including this capital loss here, of almost $2,400, and that's why, of course, this is a good week. This was a productive week, nonetheless, but still could have been much better. Basically, this week came about in a way that all eyes were on what's going to happen in the symposium, the annual symposium at Jackson Hole with the Fed, in which Fed Chairman Jerome Powell was expected to provide some more clues on what's going to happen to interest rates moving forward, and specifically in the next meeting, which will take place in September. And even though the stock market did not react positively in the first few days, and here, as you can see here, for example, I'm just going to show the IWM for the week, and this is it. Yeah, so basically it's been fairly constant on Monday, but then it came down and on Tuesday, and it remained there for the rest of the week, of course, except on Friday. And as things stand, stood at the moment, and up until this moment, yeah, basically markets were just waiting for any big announcement to come. And looking back, this was an obvious sign that something was going to happen. But here we got assigned. This is on Tuesday, because of this loss over here. We were assigned 1,100 shares of IWM. All right, and let me see where it was. Yeah. So this is it. So because we did all these trades on Monday, some of those were not in the previous video, but we still managed to transition to the QQQ later in the day, and with the excess money we still managed to sell another put on IWM at a slightly higher price. And we still, when these QQQ puts became worthless, we still managed to get a little bit more money out of this trade with a few puts at the end of the day. But then on Tuesday, when the markets came down, we were assigned 1,100 shares on IWM, because we had used all this money we used the excess money, the difference from the usual 12 between the 12 and the 11 lot size, we use that excess money to get some more ARKK puts on the strike price of 72.30 in order to have our money totally invested. But then for Wednesday, we still sold a covered call, but because markets remained very much subdued here on Wednesday, these puts, these calls here, let me see where they are. Yeah, these ones. These puts, these calls rather, became worthless quite quickly, so we closed the trade, and then on the same day we sold the next day calls. And what happened here was basically we went on a pattern in which we were selling calls expiring not on the same day but only on the next day. And this culminated in a fact that on Thursday we the calls that were supposed to expire on the 21st, which were these ones, were almost worthless, you see. And I recall that the premiums were very, very high. Premiums for the calls expiring on Friday, so yesterday. Premiums were very high, and we still managed, and so we managed to collect $1.07 per share, which gave us this large premium. Still, it could have been much higher, because if we the price recouped recovered right after we sold these calls. We sold the calls more or less right around here, and immediately the stock recovered a bit. So on this particular point in time, we were already losing some money. If we had waited a little bit more, we could have got more premium. I recall that would have been, instead of 1,169, it would have been about $1,500 in premium. But apparently, because Fed Chairman Jerome Powell was scheduled to give his speech on Friday, that's why the premiums were so high. And rightly so, the market was once again, as always, correct. And looking here at what happened on Friday, as soon as the price, as Fed Chairman Powell gave his speech about interest rates, markets did this pattern and remained remarkably constant for the rest of the day. And so our 227 call, which was here, basically went into the negative, of course, because it became very deep in the money, because of the hope that the Fed chairman gave about lowering interest rates on the next meeting. Now, if you ask me, I think that I did not see this coming. And why is that? Because the Fed futures were already expecting with a 80, were already reflecting around 80% probability of a rate cut in September, and so the market was in some way already reflecting a rate cut, the expectation of a rate cut. So I thought that, yeah, even if Fed Chairman Jerome Powell would say that, or would hint that, all right, we are going to cut rates, this would not this would not have much of an impact in the stock market, because Fed futures were already predicting with 80% probability that rates would be cut. So there's not much margin in terms of change in expectations in terms of when it comes to a rate cut, a potential rate cut in September. But yeah, it was not the case. And now, and what happened with the Fed futures after this, I think they went up to about 90% this is, of course, the news piece from yesterday. And yeah, expectation for surge to roughly 82%, following the speed from about 75%. I read somewhere it was around 90 at the time, but yeah, whatever. The increase in probability was not that big, so I was expecting that the impact on the stock market would not be that great, but still, it was. And and if we have taken the hint from the market because those premiums were so high, we should probably have sold calls not at 227, but a bit higher, 228, 229, 230, and see what happens. But we did not, and that's why we left a lot of money on the table. Of course, the shares were assigned. The sum of all premiums that we collected with these shares that we bought on Tuesday was a little bit over $2,000, because it is this premium over here plus these calls, these 3 calls that we sold. All right, and yeah, it could have been much better. We could have done a very big leap in terms of gains, but yeah, there's nothing we can do about it. Now the deal is done. Still, we managed to, because the markets were so inflated here from the beginning of the trading day, we still went ahead, and because we still have money left, we decided to buy back these puts from ARKK at 1 cent, and this released the capital to sell another put on IWM at 232. I was not too sure that we should do this, because this was quite a big. This was after the stock have jumped, and there was a possibility of a pullback. But still, the pullback, as you saw on the graph, never came. The price remained remarkably stable, and so these puts also expire worthless, and so we sold the shares at 227, breaking even, because we also bought these shares at 227, so we sold at 227, so break even. We just collected the premiums, and the rest, the other puts that we sold ARKK at 73, expire worthless, even though, and this is here, even though both puts that we sold were in the money at some point during the week. As you can see here, the stock came as below as 71.45.50 here, but then it came back, fortunately, and we ended up not having to buy these shares. This goes to show how volatile the ARKK ETF is. It's an ETF, but still is an ETF on innovation shares, but still it's very volatile. And so now, yeah, this is how things stacked up for this week. We have already for sure surpassed, I'm going to have to do the calculations, but we have already for sure surpassed the 40,000 mark. I'm going to have to review the entire number again, because the activity statement only gives me 1 year of results. We have to make the sum of all the results of all the days that we have since we started. So, and I'll do that off the screen, off of this video. But yeah, this is it. Next week, it's going to be a little bit more problematic, because if we are going to sell puts on IWM, we're going to have to do that at a much higher price, unless we extend the maturity, and so that we can sell puts at a lower price, because yeah, these puts at 227, 228 are no longer with any premium at all. So we'll have to basically go around this area to 32, to 33, something like that, which is which is not as good, because we're going to have to commit much more money to each put as a collateral. But we will have to wait and see. We will also try to diversify either through the ARKK probably, or some XLF, which did not reacted as much. It did react, but not as much as the other ones. So and it still remains at a price which is relatively not that far off from where it was a few days ago. All right, so yeah, we'll have to wait and see what happens. For the time being, this is all. Feel free to leave your comments in the comment section down below. And I'm also available on LinkedIn in case you want to ask me any questions. And of course, feel free to like the video and subscribe to the channel. And we'll reconvene next Monday or next Tuesday, depending on how my own day goes, to see how it pans out. And we'll reconvene then. And yeah, I'll see you there.